All right, before we jump in, just the usual heads up. This is all for educational purposes. It is absolutely not financial advice. Every investment has risks, so please always do your own homework.
Welcome, everyone. Today, we're going to do a deep dive into something really fascinating, the PLAZM Yield Engine. Think of it as a compounding machine that's built to fund what they're calling eternal defense. We're going to pull back the curtain and see exactly how it works, what makes it so different from everything else out there, and, look at the actual numbers that show this thing is already fired up and running. Let's dive in. So, let's kick things off with a really important question. What do you think is DeFi's biggest, most fundamental vulnerability? Seriously, what's the one thing that gets almost every protocol in the end? It's not what you might think. It's not hacks or crazy exploits. It's something much more basic: how they defend their own token price. And this really lays it all out, the old way versus the PLAZM way. On the left, you've got your traditional DeFi defense. What do? They spend their treasury to buy back their own token. And yeah, that can work for a little while. But the problem is that treasury is a ticking clock. Eventually, it's going to run empty. But look at the right side. That's the PLAZM approach. It's a total paradigm shift. It's not about spending treasury. It's about making the treasury work for you, generating yield to fund defense, well, forever. Okay, so here's what we're going to cover. We'll start with DeFi's big defense problem. Then we'll break down the perpetual yield loop. After that, we'll look at the proof, the compounding machine in action. Then we'll talk about its fuel source, the USDC pools. And finally, we'll look ahead and project what this means for eternal defense. All right, let's get into the nitty-gritty, the mechanics of this thing. The absolute heart of the entire strategy is the perpetual yield loop. This is the engine, the motor that drives the whole defense system, and it's designed to run in a non-stop, self-sustaining cycle. So you're probably wondering, how does this loop actually work? Well, it breaks down into 5 simple steps. First, ETH comes into the treasury. Pretty straightforward. Then, step 2, the treasury takes that ETH and buys these things called DexFi bonds. You can just think of them as little shares in a trading pool that earn fees. Which brings us to step 3. These bonds start generating real yield. We're talking actual cash flow from trading fees, 24/7. Then in step 4, those fees, which are paid out in stablecoins like USDC, get funneled into these special buy and burn pools. And finally, the magic moment, step 5. Those pools take that cash and just continuously buy PLAZM from the market and burn it. Poof, gone. This creates this constant, relentless buy pressure. And this isn't some small-time operation. To really grasp the scale of this, get this. The PLAZM protocol now owns almost a quarter, 24%, of all DexFi bonds that exist. This is absolutely critical. When you own that big of a slice of the pie, you capture a massive share of all the trading fees happening in that ecosystem. And all that value gets funneled right back into defending the protocol. And look, this isn't just some theory on a whiteboard. The engine has already cranked out more than $53,000 in real, actual profits. Let me be super clear about this. This is not the protocol just printing money out of thin air. This is real yield, actual cash flow, generated from other people's trading activity and captured by the assets the protocol owns. Okay, so the theory sounds good, right? The mechanism makes sense. But the real question is it actually working? And even more important, is it growing? Well, this next part is all about the proof. We're going to look at some very recent data from date 86 that shows this engine isn't just switched on, it's hitting the accelerator. So let's just look at the bond count. On day 84, the Treasury had about 5,980 bonds. The next day, it picked up 43 more. Okay, cool, but then look at day 86. It added another 53. You see that? The speed, the rate it's acquiring bonds, is actually increasing. This is our first real glimpse of that compounding effect kicking in. And more bonds means more cash flow. It's that simple. On day 85, the engine generated about $263. But just one day later, that number skyrocketed to almost $400. That is a 50% jump in daily yield in a single day. This is concrete proof that the compounding effect isn't just real, it's gaining momentum. So this is the very core of the engine, right? It's this powerful, self-reinforcing loop. More bonds mean more yield. More yield means more burns. And those burns can help fund buying, you guessed it, even more bonds. It's a cycle that just keeps accelerating. Growth literally fuels more growth. Okay, so having all this firepower is great. But is it sustainable? I mean, what happens when you run out of fuel? That's what we're talking about next. The fuel source for this whole defense machine, the USDC pools, and why they're built to never, ever run dry. Yeah, it's really important to understand that not all defense pools are built the same. On the left, you have these e-share pools. Think of them like a bucket of water. They get filled up when people enter the protocol, but once you use that water for buybacks, the bucket gets emptier. It's a limited supply. But then you look at the USDC pools on the right. They're not a bucket, they're a river. They are fed constantly by that bond yield. They are self-replenishing. So instead of limited ammo, you basically have an unlimited supply of ammunition because new capital is flowing in every single day. And as of right now, there's over 28 grand worth of firepower sitting in these self-replenishing pools. But honestly, the exact number today isn't the most important part. The key is that the faucet is always on. That nearly $400 in daily yield we just talked about, it's constantly dripping in, topping this up. Even if the protocol used every last cent for defense today, a whole new batch of ammo arrives tomorrow. All right, so we've established the engine works, and we know its fuel source is sustainable. So, what's next? Let's look to the future. Let's project this power forward and see how this machine is designed to scale up and take on its ultimate challenge, completely overtaking the daily sell pressure. This table really paints a picture of the engine's potential. Right now, we're sitting at about 6,000 bonds, which is generating that $400 a day. That's about $146,000 a year in buy pressure. Now, imagine we get to 10,000 bonds. The daily yield could jump to over $660 a day. Suddenly, we're talking about almost $250,000 a year in defense funding. And if it scales to 15,000 bonds, we're looking at almost $1,000 a day every single day, forever. So what's the end game here? It all comes down to this: a balance of forces. On one side of the scale, you have the sell pressure. After day 118, the daily token releases are expected to create about $3,300 of sell pressure. But on the other side of the scale, you have the yield engine. By that same time, if it keeps growing at this pace, it could easily be generating over $600 a day in pure buy pressure. And that's the path we're on, the path to the crossover point, where the engine's defense starts absorbing a huge and constantly growing chunk of that sell pressure, day in, day out. And all of this leads us to the core concept, the eternal defense thesis. What is it? It's a defense mechanism that doesn't burn through its own treasury to fight. No. Instead, it takes completely external trading activity from all over DeFi and converts it into perpetual, self-replenishing, and compounding buy pressure. And here's the absolute key takeaway. It is designed to get stronger over time, not weaker. And day 86 wasn't just another day. It was the day this thesis became a fact. Let's recap. During a time when the market was stressed out, the engine vacuumed up 53 new bonds. It boosted its daily yield by 50%. It locked in its massive ownership stake of nearly a quarter of all bonds. And all of this is built on a foundation of over $53,000 in real claimed profits. The data is clear. The machine is doing exactly what it was built to do. And really, this all comes down to the core philosophy of the entire system. And I think this quote says it best. The yield engine doesn't participate in market fear. It simply accumulates bonds, generates yield, and funds defense. Day after day, week after week, forever. That's not optimism, that's mechanism design. And it's working exactly as intended. Hey, thanks so much for tuning into this deep dive. Just one last reminder that all this information was for educational purposes, and it's definitely not financial advice. All investing comes with risks, so please make sure you do your own research. Thanks again.